TC members, it is your head analyst here, Curtis Scouten, and diving right into the charts on this Good Friday, April 15th, 2022. Markets are closed today, but nonetheless, that's a good time for us to get some extra research done, analysis done, insights out, and a way to inform all of our members in terms of what we can potentially expect going into next week. Just doing a kind of a weekly recap on the US S&P 500 here. This blue line was the start of the week, and obviously this last candle was yesterday, Thursday. We would usually have another session under our belt, but we only have 4 trading sessions to work with in terms of data for this week. Nonetheless, last week we prepped you guys for extra volatility this week. We were on the side that you saw more downside action versus upside action, but nonetheless, it was one wild week in terms of price action. As you can see here, we started the week trending much lower, hard, heavy selling coming in. Notice the red sell candles, which happened to be the biggest intraday sell candle for the week, was at the start of the week. So that kind of was your first sentiment indicator. How is this week going to start and end? Well, if you start off with the heaviest sell candle at the week, generally you're going to have more of a downside bias heading over the course of that week, and that's certainly what we saw. So here we had massive downside selling and then a huge rip as you hit major support levels on the daily basis, which we'll go over. And then here you had these huge massive moves off the low. And the price action of these swings is truly incredible for a trader. Now, as an investor, it's just an emotional roller coaster of not knowing where the trend is going to break in terms of up or down. But this is prime opportunity to capture short periods of volatility and really churn a profit and make your swing trading portfolio grow in times of uncertainties and chaos and overall probably more bearish direction where the markets should be heading. So then we had this massive rally, massive sell-off again. It seems that every time we had a rally, the selling pressure would just commence, and every single rally has been met with more and more fierce downside pressure. And again, you had this massive rally leading into Options X Wednesday, and then this huge sell-off on Thursday when you actually closed on options expiration. Now that Options X is complete for at least another month, I suspect we will have some sort of stability and a little more of a directional trend, or a highly probable directional trend. I don't think you'll get as many of these reversal days to the upside and the downside, but nonetheless, I do expect the volatility to continue throughout the year. If we analyze this on a daily basis, so taking a look to see what actually transpired on Wednesday, which was this green candle, and Thursday, which is this red candle. Here we were selling off hard, hit support that we have been discussing for now quite some time, which was just right in around this level here. You hit your support line to a T and you bounced off of it, which was to be expected. But usually in the past, especially over the last 2 years, every time you've hit support, you have an initial bounce, which we completed, which was this green candle, but then you usually have some follow through. And that's what has been lacking in 2022, and I certainly believe it's because of the economic policy changes. The lack of follow through in terms of bounces off of key support levels is really something to notice and pay attention to. That's the economic climate that we're heading in. It's one that doesn't favor the bullish momentum to continue. We've had the bullish momentum over the last 3 years, and one can argue over the last 10 to 12 years since the GFC, or the housing crash. That being said, there are certain tradable opportunities, but you have to be aware that the bounces are now being met with ferocious selling. And you can clearly observe that from a simple volume analysis. And I think people often get volume analysis wrong, and they tend to use it as an indicator that isn't necessarily what it's built for. But simply to analyze the big macro trend at bay here, let me just correct my chart here again. So here you can see we've had this huge run up, and now we're starting to make a series of lower highs. As you can see on the chart here, here's a lower high, and here's another lower high, and here's a lower low, and here's a new lower low. So now the question is, now that we've made our second lower high, are we on to the potentiality of making yet again another lower low? So time will tell. The question is, we need a kind of a standout wick here, or another closing basis of a lower low. So I like to use the closing basis. Some people use the wicks, but let's just say you use the closing basis. So here was pretty much your lowest point of closing, and then here was your lowest point of closing. So we would need, on a technical basis, another closing low below this 415 level here. Okay, so that's something to keep an eye on. That's the major support zone, where I do think there's a potential of a technical bounce, just based on how the geopolitical landscape is faring in Ukraine, as well as how the policy of our Federal Reserve and central banks are faring. So there's a couple different factors that you have to always monitor and pay attention to. But nonetheless, the big macro trend is, I think you're heading much lower, and we're just going to have to monitor this channel. So the price action of money and human emotion, it loves these, channels are often throughout thousands and thousands of charts a great guide to use as support down here and resistance levels. And it'll be interesting to see if yet again we bounce off of the low end of this channel and get a bounce. And as we continue lower and lower down the chart throughout the course of the year, I don't think the bounces are going to be as robust as this bounce here. I think as we get lower and lower and we find and make these new lower lows, the bounces are going to run out of that buyer's mentality. I do think you still fairly get a decent bounce, a tradable bounce, to really work to your advantage if you're a swing trader or a nimble investor or trader. But if you're not, then you ultimately have to wait for the big macro trends to play out. So it'll be interesting to see in a couple weeks to see if we've really tested this low and made a new lower low. I certainly do think it's possible. If we notice these blue lines each are for a weekly time frame. So basically in between each bar is 1 week's worth of data. And if we analyze here, so here was where you started your uptrend after hitting the lower range of this channel. So you had 1 week of upside, another week of upside, and then basically 2.5 weeks of upsides before the downside pressure started. So now here you've had 1 week, you've almost 2 weeks, basically 2.5 weeks of downside. We'll call it 2 weeks because this was a half a week. So you've had 2 weeks now of downside, less 1 day, which was Good Friday. So the question is, will we start seeing more downside into week 3? I certainly think it's highly probable. If we simply analyze, let me get rid of this. Okay, so let me just get rid of this. If we simply analyze the price action from this high, every time you've started negating the previous candle low, let me just get my drawing tool. Every time you've negated the previous candle low, you've had a sell-off, okay, to the downside there. Here, your next candle low, and what happened? You had a big sell-off down. Here, your next candle closed low, and what happened? Big sell-off. Here, your next candle closed low, and now what's interesting about yesterday's price action is you've actually closed below it. The technical damage is done, in my opinion, and it favors a higher probability of starting next week off to the downside. Now keep in mind, you are into some support, some minor support, so that's going to take a little bit of selling pressure to get through. before the people that are trading the support level for bounce really give up their shares and say, okay, I'm not staying in this market. But if it's following the same trend, you've had these clear moves down after you've closed below the previous closing low bar. So it stands to suggest that you could potentially see a move right into this center point of this channel for your next level of support. And after that, where's your next level of support going to be? The start of this impulse bar here. Okay, so here you have your closing green bar, daily close, and then you had your impulse move up. That's going to be your next big level of support if the center point of this channel breaks. I eventually do think it will break, but the question is, will it happen? How fast will it happen? Will it happen on Monday? Potentially this pattern could have continued and played out today if the markets were open, but it'll be really a strong testament of the bulls to see if they can hold this market up, especially since all of the major technicals are pointing towards some massive downside. So once again, if we look at the volume, okay, I'm a big fan of volume and using volume into every sort of trade I make. The reason being is because volume tells you a detailed story of who's buying, how much buying is going on, and how much shares are being exchanged at any given time, and whether the shares being exchanged are institutions accumulating or institutions distributing, aka selling. So when we look on a daily basis, the volume, this green standout bar volume, to me it stands out on the chart. You have to go back, pretty far. There's no real standout volume bar for a good, year or at least that you can really use to compare. So this volume bar, huge amount of green volume on the chart, which would typically mean that since it's such a big green volume bar, it means that a lot of people were buying on that specific day, which it is your wick low before this massive move to the upside started. So it is your standout low on the chart that can be used to trade against. But what's really interesting is that it does trump on a daily basis all of the previous other candles. So one would say, hey, no, this market is going to resume the upside bullish momentum because you have this huge standout green volume bar and there's been no other red bars that have taken out that green volume bar on a daily basis. So that stands to suggest that this market's bullishness is still intact and you've made your significant low in the charts. Well, this is where you have to expand your analysis beyond the daily chart. Let's take a look at the weekly, shall we? So when we look at the weekly chart, it tells yet again a different story. You do have a huge green volume bar, but look what's bigger on the weekly basis. The red volume bar here trumps the previous green volume bars. So the bigger time frame shows you that the bears are still in control of this market. Don't be fooled. Do not be fooled. On a bigger time frame, the bears are still in control of this market. And what's interesting is that you did have this massive green volume bar before after the first sell-off, major sell-off from the peak started. So naturally, there's tons of people on the first initial buy that have been engraved over the years to buy the dip. And that's certainly what they did. They bought the dip back up. But then when you fast forward, you had another big green candle, and that was your daily. Remember that green bar that I was showing you on a daily basis? Well, that green bar is included in this week. It was strength in terms of people buying nonetheless. But then when you look here, this candle, it doesn't look bigger than these wicks for certain. So one would think by simply just looking at the wicks and the bodies of this candles and the nature of the reversal, one would assume that this candle would have less volume on a weekly basis as opposed to, say, this big candle or this big candle. Or even looking at the size of the candle here, this green candle is massive compared to all your other candles, and one would assume that means it has to have higher volume. Well, that's not how volume works in technical analysis and charting, and I think that's where people often get a sense of misdirection when trying to include TA and volume analysis. Simply by having a larger candle in body does not mean the volume bar is going to be bigger. The amount of shares being traded in an exchange does not necessarily have to be bigger or smaller based on the size of the candle. So keeping that in mind, on a weekly basis, we have had this massive sell pressure that is still trumping all your previous green candles. And if you actually look at a longer term, this is your COVID low, this is your pre-COVID high, massive collapse and sell-off. If you look at the biggest green candle at the COVID low, which probably was one of your greatest buying opportunities before this bull rally ensued for 2 years, that green candle volume did not even trump the sell pressure that you experienced just recently a few weeks ago. So to me, as a trader and investor, that simple nuance shows that the bears are in control. If the sell pressure was stronger than the buying pressure in the sense that the amount of shares being exchanged up here as opposed to down here, that is a big red flag in my opinion. And that's why we are short the indices over the longer term. You have to be nimble because the Fed policy can change at any given point, and you have to be able to pivot just like Powell has pivoted on us in the past. This market is not driven by fundamentals. It is driven by one fundamental. Basically, what macroeconomic policy is our central banks instilling on the markets? Is it loose or is it tight? Doesn't have to get more complicated than that. The macro factors at bay are interest rates, QE or QT, and expansion or reduction of the balance sheet. So just little interesting tidbits. And again, the sell pressure in the COVID crash was almost as great as the sell pressure here, but it doesn't look like it. And that's the sneakiness of when you're at the bottom of the market and the sell pressure has the final washout low versus when you're at the top of the market and you're selling into many buyers. That's the key difference. That's the number of shares and larger money institutions dumping into smaller retail investors or traders. That's why it's so dangerous to know why you're at a potential cycle top. It's very crucial to not be the one accumulating at these high lofty levels when we potentially have significantly more downside ahead. So just a little bit of food for thought. These channels will be powerful in my opinion to analyzing key support and resistance levels. Next week, my whole theory is that I do think we get a small short-term bounce up in the markets. However, I think later on in the week and then potentially next week we start trending lower. So, forecasts aren't really the best thing, but I'll put myself out there. I think we get some sort of a small little rally up, getting stuck under this red bar resistance before rolling over into next week and testing your next support zone. And again, we will be buying both of these support zones, key levels, for bounce trades, but eventually this is going to break. And when that breaks, when this pivot low breaks, you're going to wipe out those bullish people that were waiting to buy the dip and holding on to their investments. Now, a lot of them are going to hold on to their investments until they start seeing this market trend lower, which will eventually drive everyone to their breaking point. And a lot of analysts are now saying, "Oh, we're not seeing a recession. Things are turning around." I am on the side that things aren't turning around. They may be temporarily disguised like they're turning around in the sense that economic data is getting better. Unemployment's at one of its lowest rates now. Typically, recessions start when unemployment is low. People would think it's the opposite. When unemployment is high, people think recessions start, but that's not what the historical data shows us. So, a couple of key things are PMIs to watch, obviously inflation, but I think these markets are in significant trouble, and I think a lot of people are giving the markets more credit than they are due. I think the markets have used all of their credit, so I don't think that deserves to give them any. Little play on words there, but nonetheless, I think these markets can roll over a lot faster than what people anticipate. I mean, you have these big wigs, at JP Morgan, Jamie Dimon, saying that he only really sees the markets heading into trouble at the latter part of the year or in 2023. I think things could sneak up on people a lot quicker, potentially in the summer of this year, than people expect. And, there's a lot of savings that people still have, and consumer spending is still up high, and blah, 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 blah. But it doesn't negate the fact that inflation is killing the majority of the population. And when I say the majority of the population's wealth, a big factor is spent on food and energy, and that's where people are feeling the pinch. The average consumer in North America, which is well above 50% of the population across the board. So I think when you have that population starting to sharpen their pencils and really tighten down on what they are and what they are not spending on, that's going to naturally inhibit economic growth, as well as central bank policy around the world in the sense of tightening rates, reducing balance sheets. And the question is, how far will they take the bearish economic policy, the tightening policy? That's the big question. But I think they have to take it a lot farther, just based off of these charts and where we were trading pre-COVID levels. To think that before any of the money was printed in the last 22 months, it would have to be coming down to this 34.08 mark. That is a substantial drop from where we currently are, which in the indices, it's still another 22% drop. So imagine what that would do to the smaller cap stocks.